There's three things you need when you're forming any kind of trade, right? So the first thing is you need to know where to trade from, what to look for, and why you are looking for it. This is what I call the triple X model. So the triple X model will answer three questions right off the bat, right? So if you're a trader, I want you to put every trade you take through a ruthless algorithm. You need to know where to trade from, you need to know what to look for, and most importantly, you need to know why the market moves down in the first place. If you know these three things, there's no reason why you can't be a profitable trader, right? And that's what I'm going to break down in this video today, right? So we're going to be going over a break and retest trade on ES, or the S&P 500. So for those who are asking, the platform I use is the ATAS platform over here, right? So this is ES on the ATAS platform. So the ATAS platform is the best platform for reading buyers and sellers at key levels, right? And we're going to be breaking this down step by step on how I do that, right? So on the ATAS platform, you can see the candles and you can see the fair value gaps, right? So you have access to all the data that anyone else can have access to, right? So it's the best platform I use. But let's just dive into this video over here. So for those traders who don't know, right? So the way that I form a key level, I'm typically looking at two things. I'm looking at liquidity and I'm looking at fair value gaps. Those are the two things that I'm looking for, right? When it comes to choosing a key level, I'm looking for liquidity, right? If I can spell that. So I'm looking for liquidity and I'm looking for fair value gaps, right? FVGs or fair value gaps. So when it comes to liquidity, it's very simple. This is a two-phase manipulation model. So a two-phase manipulation model will look something like this. So we want to see a sweep of the Asian range low before a sweep of the Asian range high. So you want to ask yourself, what is going on, right? You want to be very intricate around the Asian range high and low. It's that simple. So this is the Asian range low, and you can see the market has just about swept the Asian low. So the Asian low, or the overnight low, is something we focus on. And this is what we call manipulation phase one. So you want to ask yourself, what does this manipulation phase one actually mean? So a phase one manipulation means there's been an enticement of sellers, right? We call these early sellers. The reason they're called early sellers is because we are going to be taking a sell trade at this particular POI. So if we just kind of play price on, right, when you're forming a trade, you can look at it from a basic ICT kind of concept, right? You can see we have accumulation and now we have our phase two manipulation. So why is this called phase two manipulation? So this is phase two manipulation purely because we can see the Asian low being swept and then we can see the Asian high being swept, right? So the Asian low and the Asian high represent the two sides of the manipulation. So whenever you're stuck, just break it down in terms of what the Asian range and what is price done with the Asian range, right? So that is the liquidity part of things. Now, when it comes to fair value gaps, right, I want traders to understand that this entire region was the fair value gap. So the fair value gap itself is what we're not so much interested in. We're not interested so much in the fair value gap, right? That is the fair value gap. What we are interested in is the candle or the region before the fair value gap, right? So that's going to be this region here. So that's something I normally label in gray. So this is my POI or my key level. So that is the first step to the triple X model, right? So the first thing to understand is you want to know where you are trading from. That is kind of step one. So step one is where are you trading from, right? So you need to know where you're trading from. If you don't have a key level, you're going to be trading from anywhere and everywhere, and the fastest way to blow your account and the slowest way to get profitable is to take random trades that are not at key level. So this is very important to understand. That is step one. Now, once you have your step one, the next thing you're looking for is step two. So step two is generally quite simple. You're just looking for an entry inside, right? So what are you looking for? That is the what. You are looking for an entry, and then more specifically on the 5-minute time frame, you are going to be looking for buyers and sellers. So if we just kind of play price on a little bit, what you can see is you can see the market opened over here just after the blue region, and now we want to see how price behaves at this level. So this is now step number two. So step one, we have our what, right? So that's tick. That's step one. Step two, we want to understand, we want to wait for an entry. So this is going to be step two, and we want to understand what is going on inside of this fair value gap, right? That is very important to understand. So if we just kind of bring the ATAS platform in front of us, we want to understand what was going on inside of this initial rejection. So we actually had two rejections over here to the upside, right? I'm just going to bring these next to each other so you can see them. So what was going on over here, right? So let me just bring these here. So we're going to be looking at mainly where I've circled in number two. So we want to understand what was going on over here. So this corresponds to this region, right? So what was going on? So can you see where it says 452 for 219, 107 for 46, right? So what do these numbers actually represent? What does this mean? What do these numbers mean, right? So this is the candle I want traders to focus on, right? This candle is the same as this candle that I've mainly circled over here. So you are seeing aggressive sellers, right? What you're seeing is you're seeing more bid participants. You see more market participants hitting the bid than hitting the ask. So this means that there's more aggressive sellers. So on ES, this is now around 62.93 up to about 62.96. So you know, around the 62.95 area, there is a large number of aggressive sellers, right? The bid is constantly being hit. So what does this tell you, right? If the market rallies higher like this, what does that tell you, right? The market did rally higher, probably 96 to probably about 6-7 points, right? The market rallied up, and then obviously we shot back down. So what does this tell you about this zone over here, right? It's showing you that the zone is being supported by passive buyers. Because it's very simple, right? I get lots of questions. How do you see who's passive? How do you see who's in control, right? You want to reframe your trading from not what pattern do I look for, or what fair value gap do I look for. You want to reframe your trading, and you want to ask yourself, who is in control at my zone? And this leads on to step number 3. It is the why. So you want to know who is in control between the buyers and the sellers. So over here, we know that buyers are in control. And the reason we know buyers are in control is very simple. We saw a huge amount of aggressive sellers, and we saw a huge amount of aggressive sellers, right? These aggressive sellers drove price higher. These aggressive sellers drove price higher. So that means that passive buyers are in control. I'm just going to write buyers over here, right? Buyers are in control of the market. So if I continue to play price on, what we ended up seeing is we ended up seeing a break of the zone, right? So now over here, you want to ask yourself, who is in control here? Well, what we're seeing is we're seeing the buyers that were previously in control at step number 2. We can see these buyers starting to fail, right? We see them starting to fail. The reason we know that they're starting to fail is very simple. If these buyers were successful, they would have held up the level, but they didn't, right? We see price breaking with a body below. We see a body closure below the level. This body closure does give us some extra confirmation, right? So if I clear the screens up a little bit, we saw that there were aggressive sellers failing, which means buyers were in control, but now the buyers have failed due to this region. Also, we can see prices tapped into this fair value gap over here. So you want to understand what was going on at this fair value gap also. So if we just go back to the ATAS platform, this is breaking down a true break and retest, right? Every break and retest follows the same principle. So you see this region I've circled over here? This region I've circled inside of this 1 minute kind of fair value gap is basically what you saw over here. So this was the 1 minute fair value gap just over here, and this was price coming into the 1 minute fair value gap, right? Really take notes on this, right, and pay close attention. Can you see where it says 12 for 103, 397 for 560, right? So if we just take the top row, we see 12 for 103. That's almost a 10x difference, or a 9x difference, right? There's 9 times as many aggressive buyers as there are aggressive sellers, right? Despite that, the market was not able to find an area of demand or an area of support. Those aggressive buyers failed, right? So already what we can see over here is we can see passive buyers over here. So these were passive buyers. Just write P. These were passive buyers that have began to give way, and these were aggressive buyers. So we can see both of the buyers over here have began to fail, right? The buyers are beginning to fail, okay? So when you're looking for a break and retest, you want to see how the market behaves in and around this zone, okay? So we know we can have our stop loss just in this position. The reason we can have our stop loss there is because we know buyers have failed, right? Buyers have failed. So if we go back to the ATAS platform one more time, we're going to be studying the break and retest. So we're going to be understanding, once we've had the break, so this is the break over here, we're looking to see how the market behaves at this area. We're looking to see how price behaves. How does price behave at this key level, should I say? And what we're looking for is we are looking for 0 prints, right? So we can see here 0 for 4, and then we see over here 707 for 1K, and we see 0 for 64. So we see significantly more aggressive buyers than sellers. Despite that, the market was unable to break above this zone. So what does that tell you? It tells you once again, aggressive buyers have failed, right? Aggressive buyers have failed. So what's really going on is you can see buyers have been failing across the board, right? Buyers have failed here, buyers have failed here, buyers were also failing here and failing here. So that means there's only one thing that you should be doing, right? It means that sellers are in control of the market, right? So the way that we determine that, this is step 3. So remember we started off with where? Where is essentially the fair value gap. What you're looking for is the buyers and sellers. The why comes down to the order flow. So to break this down one more time, why do you want to be selling at this zone, right? What gives you the validation to sell at this zone, right? So the only thing that gives you the validation really is you're looking for aggressive buyers to fail, right? Aggressive buyers failed over here. Aggressive buyers also failed over here because you can see the break and retest, right? You can see the price breaking below and you can see a couple of retests, right? 43 for 268, 0 for 13, 0 for 12. So we can see 0 prints. Now, when you see 0 prints, it means the auction has been wiped out. It means that there was no trading, there was no transactions at that price, right? It shows you aggressive buyers, right? Buyers are trying to be aggressive, but those buyers have not been rewarded, right? We also know the buyers failed here, and also the buyers, those passive buyers that propped up here, are no longer present because we had price breaking below. So the only reason you want to take a trade is because sellers are in control. And the reason sellers are in control is because the aggressive buyers and the passive buyers have both failed, right? And that is the reason the market heads lower in the first place, right? So you could have taken a short position just off this area with a stop loss just above this area, right? So as you can see, it was a pretty good trade. It went down to 1 to 3, 1 to 4 risk to reward. Okay, so this is basically how you take a break and retest, right? Using the 3 steps. So you want to know where, what, why, right? So key level, entry, order flow. It's really that simple. Key level, entry, order flow. Everything comes down to these 3 things. So if you're trading and you're struggling, right? The reason most traders struggle isn't because they don't have an edge. They don't know how to apply their edge. They don't know what's going on within their edge. So they might have a fair value gap, a breaker. They might have liquidity sweeps. None of this stuff, sorry. You can never bring this stuff together unless you have a good and sound understanding of key levels, what's going on inside of key levels, and what drives price higher or lower, above or below key levels. And so in this video, I wanted to make it on a bearish break and retest, right? So if you have any questions, feel free to drop them in the comments, and I look forward to seeing all of you in the next one.